Going on, so I wanted to continue with the video I made earlier. So going on to CAD yen. CAD yen's an interesting one as well. I mean, obviously what we can see here if we go to the daily is we can see that price is within this range here. So we know that the best areas to get positioned are either the top or the bottom of this range. So what I am looking at over here is understanding that, okay, this is basically tapped into this low here, and then we had a mini double bottom there. That's done what it needs to in that area, so we can move on from that. Then we look at the next area where we basically had something like that. Price then came down, failed to continue, came back up, broke that. It was looking a bit like this. Doesn't look the most regular, but if we had a follow through and something like that, we could continue and probably see that sell, but it didn't. And I think the clue is now in what we are seeing here, where you can see how price correctively moves higher and it's not really moving with momentum. It's started off quite corrective, it's then done that, it's done this, and it's kind of just moving, hovering this way. I wouldn't be surprised if we get some sort of momentum come in the market for it to move higher. So the next question that I do ask myself is, where is the liquidity sitting? And what would the price action really look like? So I can't really tell for certain if, you know, we're basically playing into this low or this low, right? So what I'm better off doing right now is just being patient and waiting. Now the sell-off is there, and in the intraday sort of perspective of taking a short-term trade, there is a trade there, don't get me wrong. I can go to the 4 hour right now, and if I go to the 4 hour, what I can probably see over here is we responded to this area here, mini double top as well, so a little bit of an M-star scoop, and then from there we had a push down. We didn't completely tap into that low, we had a continuation and we continue selling. Great, so there was trading opportunities in there, but again, is this the market condition where I have a huge advantage? Not necessarily, but it doesn't mean that, you know, I wouldn't take a trade. So what I would be looking at is two things. I want to see how does price respond to this low here, right? Because in theory, it's filling all of those little gaps, and it's actually going to probably break this. So it's going to come down with momentum and come in here. Then the question is, what happens if it stalls? Are we going to be then looking at something like this, where then we get a clear structure like that, and we can then play it into the next low over here? And then at that point there, we may be looking at the buys to the upside. So when you do look at it like that, then you do have this sort of channel where it does kind of show that completion of a channel into that low, and then you have that structure, and that makes a lot of sense. So right now I wouldn't be looking to take any immediate shorts based on emotions or whatever, because it seems like this could potentially be the retest. This is a bit of the footprint, and right now we might potentially be see something forming in here for us to then get that move. So for that reason, I think being patient and just waiting for that development is very important. Yeah, there is the possibility that we just sell off, and don't get me wrong, that happens, but again, it's not something that is replicatable and you can do consistently over time that can yield high levels of profits. And don't get me wrong, I don't know every strategy in the book. There might be a strategy out there where, you know, you could take a position in here somewhere and you could make money, but for looking at it on the 4 hour, I don't really see it necessary right now to be zooming in too low. This isn't the typical structure that always goes as well. Obviously we can see clear 1, 2, you know, we had that correction there. That's great, but now we know that we're pretty far in the run as well. I mean, you can clearly see that, and with that in mind, you know, it would make sense for this to then get messy and start accumulating to get more volume to continue lower. And I think for that reason there, you need to then come to the conclusion that it's better to start preserving your capital and waiting for something a little bit more developed. So you don't need to be keeping an eye on this so much, and then it basically just develops something very clear, and then you can take a trade in there. So wanted to just kind of point that one out. So CAD yen, I think, needs a bit of time. CAD Swiss, do you know what? CAD Swiss is actually quite an interesting pair as well. Very similar to that trade idea of just waiting for something to develop. So if I just pull this up here, what we can see here, and I've already marked it on because I was looking at it previously, was if I go to the daily, we can see how price is moving. And, you know, CAD Swiss has always been a bit like this, where And I'll just do a quick pattern separation. Is, you know, you've got this, and then it separates, goes into that, and then it goes into its own little piece there, which wasn't really the cleanest, but I'm sure you could read something in there. And then it does that, creates another one there, and then now we're getting another one here, probably get another one in there, and then it does that, and then it continues and just continues making this move. And then eventually, you know, you get these sort of moves back up, and then it continues moving lower. So bear that in mind. You can see the overall move, and you can catch these as well. I mean, I don't think there's anything immediately wrong with CAD Swiss. It's just you have to kind of be very, very patient with it as well. It doesn't always move very aggressively, and you can get caught up in these sideways consolidations from time to time. But again, you can see from a very clear perspective of pattern separation, besides this one here, there was a decent trade in there, decent trade there, decent trade in this one as well. Just again, it wasn't the cleanest, it wasn't the best, but there was trades there. So again, you can catch something. But in comparison to some of the other pairs that we've gone through and the ones that we will go through, you'll see why it's not always the first thing that you would be jumping towards, because there's always some better trades out there worth waiting for, especially in terms of the overall high time frame positioning and so forth. So Swiss yen is an interesting one too. I mean, don't get me wrong, there was a trade that I was shadowing on here which looks like it's doing phenomenal. So you can see that obviously high value area, we then squeezed, and I'll just pick this off here. Always taps into the side. Let's just move that here. And just bear in mind, this is overall squeeze. So we are trading within this overall squeeze. And then you can see here, if I just take that, move it to the left, you can see how we've tapped into this, and then we squeezed. So then I'll go to the 4 hour just to get a little bit more refinement on this, and then you can see it a bit closer. So if I then rein this line back in, and we just put it in here. Now, obviously, you have to bear this in mind. We don't always get the breakout like this. You know, it's not always a thing, but in terms of just trading structure and understanding things, it's there. So what we had is we had the value area here. We then scooped lower. We created a base where you can see the origin over here. So we created a base there. And then after we did that, we then made it move higher. Interesting bit of price action there, because what happened here was we failed to continue after this failed continuation. So you can see here that arguably, let me just take this bit off. Arguably, you can see here, if you just isolate that bit of continuation, you had the 1, 2, 3 into this area. We then had that pretty nice bullish candle there, pin bar, heavy bodied as well. And if I just invert that actually for a second, it might be easier to see. So what you can see here is, in terms of a continuation, we had the hook point here. We then got that pretty nice washout. We had a 1, 2, 3 into it, and then we sold off. We came to about 90% of the overall range, and then we just retraced and came back up, tapped into this bit of liquidity up here, sold off, created this 1, 2, 3 sort of messy consolidation, came in, tapped the low, came back up, retested the high, a bit like an M star, but just quite messy and corrective. Tapped into that, and then we eventually correctively sold off. Keyword there, corrective, right? We're accumulating volume on the way down. Now, there were structures in there that you could have traded, yeah, sure. But now, as we then tap into that low there, what happens is we continuously correctively move within the channel as the channel gets tighter and tighter. What then gets quite interesting over here is that as we squeeze into this area here, we can then see that price is then still, you know, pretty much just squeezing within that channel into the downside, and it's squeezing. It's no surprise that it did break back up, but then as I now refine it to the 1 hour, and I'll just invert that back to its original, we can then see that, okay, overall channel, and then internally, you know, we've got this bit of a squeeze here. If you refine it a bit, it's, you know, it's just getting a bit too much. So I'm going to remove that, because really and truly, it's not really that necessary. This one I think is somewhat necessary, because you can see where you are within the channel. I can remove the overall larger channel because we know where we are. We are in all-time high territory as well. So now when you establish it, there was a 1, 2, 3 with the override, and then you had this squeeze within there. We're looking at continuations and failed continuations at this point. So we want to basically be saying, if we're going to continue higher, are we respecting the continuation and we're getting the clear trade set up? If we're not, how are we then showing rejection for the continuation, and how can we get positioned well? So it's actually like mastering that neutrality of trading, which is nice. So then what you can see here is that in terms of a continuation, you know, we would basically line this off here and then basically have it like that, and we'd basically see this, the first touch here section comes up, squeezes, comes up there, comes back down, and then you can see how overall this becomes the range for the continuation. That's separated in its own, that becomes a bit of liquidity down there which we might tap into for the range, but then we've created a base within it, and then we can just show that that is it. But obviously for obvious reasons we didn't get that. So then we look at the next point where perhaps maybe it's a larger flag and it's not going to be doing what we thought it was. So then as it breaks lower over here, then it starts tapping into that low, right? If you don't know the significance of that, I think it's worth watching some of the other videos I have, or potentially just asking the question, and I could point it out in a separate video if you want. And then this comes up, does its thing, comes up there, and then maybe it develops a little bit further and it goes. And then that becomes one large piece of its own coming off the back of that. And then what you notice is overall this is still part of this channel, and then it starts making its way. And that happens quite a lot. So bear that in mind, that that is also a very strong possibility as well. So then it's like, how, well, if that's not the game plan, then what is? And then we look at it here. So we have to always pay attention to this. When price comes into these areas here, such as this area here, this area here, this is where we want to be evaluating if we're going to be going long, or if price is then deciding to do something else. I would refine to the 15 just to show you the clarity. So what we can see here is, and if I just pull this up again, so we can see that price pushed up, then created this, created a base there, tapped into the base, failed to continue, came up, left a bit of a gap there, and then it sold off, retested the base, came up again, failed to continue, and then started to sell off. So the psychology of that is basically telling you that there's not enough buyers in the market right now to hold the price and keep pushing it higher, even though you've got 1, 2, 3, you've got solid confirmation, you've got everything you need. It's not there, so it's going to seek more liquidity. So at that point there, what we're seeing is price then sells off. Price is then selling off, and then it's coming into the next point of liquidity. Now, you would assume that after having a 1, 2, 3, 4, multiple touches, 5 times revisited this area, it would have had more than enough to continue, right? But it didn't. So then the take is, are we then seeking more liquidity from these areas, right? Because they're the most obvious ones. But then the real question is, what if there is enough liquidity on the buys now that everyone's trying to get long, and we're actually going the other way? And you can cross-correlate that with a lot of other yen pairs to see where they're positioned and stuff, because Swiss yen is positioned in all-time highs. So it's a trickier area to take a trade in, because you don't have price to the left to show you that you've tapped into a key value area. It's done everything it needs. The weeklies confirming, like, that's the thing about all-time high value areas is you could get a very, very nice weekly or daily candle, but it means nothing, because all it is just a candle at that point. It's not trading into anything significant, any key psychological levels. So at that point there, you're just trading a candle, and that can be a bad confirmation bias. So what we can see here is the trade has then shaped up over here. You can see that after all of that, we came back up, we retested it, which you can see right here, came back, retested it, and then after that retest, it then sold off and created this continuation here. Within that continuation there, you had pretty much 2 solid candles. If I zoom in a little bit closer, now, would you have gone tighter? Possibly, but I didn't want to. But again, it was looking at it like this, and I was like, all right, so if we do that and we have something like this, I still want to be protected just about in case that comes back up for whatever reason. And it does this, where it comes down, creates a base there, and it comes up and then does that. and it spikes up. So I wanted to kind of survive something like this, probably not spiking and taking me out there, but that was the whole idea of me putting the stop loss there. Anyway, so as you can see here, as we continue to move, we then followed through from there, and I understood that if we're going to break this low, we're probably going to come into those areas. So I want to be on my management. I only have about 0.3 into the next point there, but then to this point down here, which was basically where I really wanted to pay attention towards, because if we're creating something larger, that could be the area where price comes down, taps in there, we get this sort of scoop, and then we could potentially start moving back up. So I wanted to be a bit careful. And then over here we have around about 3 to 1, so that was pretty decent. I wanted to then evaluate how does price respond in that area. Are we creating continuation? Are we moving? So give it some time, some room. Bear in mind we are on the 15 minutes, so I'm not managing it on the 15. I'm looking at it on the 1 hour, and then you can see how price just pretty much sold off. I think I was sleeping around about that time, and then as I woke up it was somewhere around about here, and then it started pushing and continued and came into those levels. As it came to these levels, I was more than happy to lock in about 5% and get out of the market, just because it's basically played its move. As you can see that blue line there, I was basically trying to play that as that is the correction to the downside. Of course, you know, arguably you could say, well, there was so much more room, this could be, you know, such a huge trade. Yeah, but you just don't know that. You know, yeah, sure, it went to 10%, but you don't know that. You know, 5% pretty decent. And then we did get a continuation here. So if I really wanted to, you know, get involved again, there was opportunity. It's just, again, I would have got involved. If I was to get involved on this, it would have been somewhere around about there, and I would have put stops just above here. Probably I would have gone around about 40 pips, I'll be honest with you. 40 pips there, and then I would have played that into that low, which would have given me like about 1.85%, and that would have been the trade in itself. So again, you know, you can see that risk reward wise, it wasn't really worth it as well. You could go tighter, yeah, sure. I mean, it's just I wasn't really feeling to take another trade immediately after such a win. And then, yeah, 5% on that. So that was a pretty decent trade in itself. And then in terms of expectation of where potentially the price could be moving, I'm still, like I said with CAD-GM, I'm still looking at the potential for a long. So I don't want to write that off completely. I think taking this bit of price here, moving it there, and basically just now waiting and seeing like, okay, well, you know, we do have this large bit of corrective price action there where it can make its way down here. Don't get me wrong, that's not impossible. It's just when I then zoom out to the daily and the weekly and I'm looking at it, I do want to be a bit more on the side of, all right, if we're moving there, we're going to have to build the liquidity, we're going to have to build the volume, because, you know, people can just keep selling, don't get me wrong, and it can just sell off. And I think in these market conditions, when we go against the corrective wave, it makes sense, but it wouldn't make sense to go there without giving us continuation. So what do we have here? Well, the sequence is looking nice, and I'm going to just clear this one off. Where is that? So take that off there. So what I do like about this is we had the first flag, which came after a failed flag, right? And then we had the first flag, which they're both FF at this point. And then we have the fantastic flag, right there. Well, it wasn't great, to be fair, because we had that, but arguably we could say that was retesting that, so it's irrelevant. We're looking at this as the overall bit. You could take a reduced risk entry, whatever. But yeah, so we had that flag. Then we had these little small tight one there, which I'm not really a fan of. And then if we look left, you know, there isn't really anything left. So this can start accumulating, start coming into something larger, which I'll be more of a fan of. If we had something like that, and then maybe even a washout there, and then we got involved here to get into the long short, I'll be all over that. I think that would be a phenomenal trade, because it's basically respecting PSE. So I think the nice thing about the positioning is it's still got room to go from A to B. The sequence, you can see, you know, it's pretty much doing everything it needs to do. First flag, second flag, and then third flag. And where it's positioned as well is pretty decent in terms of the middle of the structure. It's got all this room here, which I like. And then the entry, we just have to wait now and see if we get the structure. we get 1, 2, 3, we get the entry in here, and then boom, we're ready to go to the short. And I think that would be solid. I think if we get that, that would be great. That would be everything we need, and we can get in play. And the same applies for the other yen pairs, I'll be honest with you. Obviously, they're not going to be trading with a corrective squeeze like this as much, but you know, you can mark up the key areas to the left and so forth. So just wanted to kind of put that into perspective. I know that, again, this one was around about a 20-minute video, but I hope that the content that I threw in here was helpful. I think what I'll try to do now is go through the euro pairs, and then we can do GBP New Zealand and US dollar in a separate video. So Euro Aussie, do you know what Euro Aussie is? It's okay. It's looking like it's just building up its liquidity right now for the next move, so I will give it time. I'm gonna say it doesn't necessarily need to come down here. That could be the base, and then we could potentially be playing something like that. So I'll look at that on the daily. It doesn't necessarily, it doesn't need to come all the way back down there. That was more than enough. We kind of even have a bit of this coming in, and then you have that. That was a bit of a squeeze here as well. Squeeze into that point. Yeah, I mean, that's a possibility. This is a strong possibility where if this is the structure and we're basically seeing it as, you know, this overall point is now becoming the larger range, I would say it's a tricky one, to be honest, because I'm not a fan of something like that. I do like the idea of this moving 1, 2, 3. I would wait personally, because this can still develop and be messy and be a part of this crazy range, and it just does, you know, all sorts. So I don't want to get caught up into some crazy mess. I think what I'll do is I'll say that that's coming in, retesting this area. If we come up, we start pushing, and then we get some sort of continuation here where we've basically cleared all of that. I wouldn't mind something like this to then go long, to then play into that section, and then the point above over there. So something over here would be more preferred to then play into that area there. That's what I would look for personally. So, you know, Euro Aussie is not one that I'm going to be putting on watch anytime very soon until I see that major turnaround. I want to see a break above this area or a sell off, and then continuation here, and then manage it into those areas. Or, you know, if I get a continuation in there, would be great to manage it into that area, and then potentially lower into that area, and then if it continues, great. So yeah, I mean, I need to see a lot for Euro Aussie to be involved. Euro CAD, do you know what Euro CAD is? Also one that was been eyeing up. So it's similar to what we saw with Swiss yen, where it's in that squeeze, but this squeeze is a little bit more of a channel. So obviously you can see that, you know, how price has been moving within this channel. It's got its bottom, and it's just kind of just hovering in. It's now kind of at that level where it's at the top of the channel, but what you do notice sometimes is it doesn't necessarily need to just reject immediately. We can just sit on that low and then eventually come back up. So what I am looking at patiently is I want to see something like price comes in over here, squeezes, does its thing, and then we get a sharp sell-off and a clear structure, and then another one maybe trading through this, and then we come in, tap into those lows, and then at that point it's a manageable situation, because then if it does come back up to then create this sort of squeeze, you know, again, it's something that we can take advantage of, that maybe even that, which, you know, let's say that one becomes 7%, and then that one is like a good 4%. You know, even so, to that low, you're doing pretty well. You've already got over 10% on that sequence alone. So that's basically what I'm waiting for. But as I mentioned, you know, we could just hover around for quite some time. So it's one where I would do moderately, let's say maybe every couple days, every day or so, I'll do a check-in and just see how it's doing. Wait for that sell-off, that key sort of message from the market. I don't want to be getting caught up in just any old price action, and also the positioning is very important. As you can see, this one is trading just through the low. So if you see it here, That would be the low and that would be the flag there, and that one there is there. Everything is very intentional here. I think if you're going off and you're taking something, and let's say this pushes up and then sells off sharp, and it comes here and it's sitting on the low, and then it does that, and then it does this, and it comes in and it's just been sitting there for a while, would you be surprised if you saw this and it just continued moving? Because then you draw that off and you say, okay, we've always been a part of this squeeze, so to avoid that, I would wait for something to be broken, like maybe just draw a line in the sand, it does its thing, eventually comes in with momentum, gives you a clear setup, another clear setup, and then you've basically got a base where you're just trading into. And who knows, if it's the one, it just continues going and you're in a pretty decent trade. But the trade idea mainly is to manage in from there to this area, and then manage aggressively, and then if it does sell off, just trail it accordingly. But I'm not trying to bank on this trade being the one to just continue going all the way. And then we've got Euro GBP, just clear that off. Euro GBP. So Euro GBP as well is again, it needs a bit of time, but it's definitely showing some promising price action. I think if I just clear this off, you can already see what I was looking at. That's basically the retest. This is accumulation, and basically I'm waiting for something like this, and then if we can come back in over here, sell off, do whatever it needs to get to these areas, taps into liquidity, comes up, insurance entry, and we're good. I think that's crystal clear. That doesn't get any more simple than that. And then on the offside, where let's say for whatever reason, I'm just going to mark that up here, right? And you can see there's a near miss gap there. But for whatever reason, the psychology of this could be with the near miss, and we might see something like it just sells off and DXY goes long, and then we get continuation here. Why would you not? You then take that and it sells off and then eventually comes back up to then fill the gap. But in the meanwhile, you've been able to take advantage of this positioned in there to that low, let's say, or even moderately decent, and then you've walked away with, like, let's say 12%, 9%, 8%, doesn't really matter. But at the end of the day, you've been able to take advantage of what you understood, and then you're like, okay, well, you had this, we had a little point over here, we had this as the strongest magnet, and it came down here, tapped into those areas or left a gap, whatever. You can still take advantage of that. So I wouldn't hold a strong bias for just longs. I mean, the long looks phenomenal, take a trade in there, get positioned right there, and then you're basically playing the A to B move here. That could be easily an easy 7-8%, so again, another phenomenal trade. And who knows, it could continue moving a bit more aggressively and push much further higher. But that's the go-to trade for me, really and truly. I think it's not even necessary right now to be over forecasting on it, because it still needs time. But you can see, it's taken out this high, which is nice, and then it sold off, created a base, came back up, and now it's hovering around. It'll probably take out that high, fill the gap to this high, and then eventually all of that has been taken out. We'll break above, and then at that point there we can start establishing, is the price just going to be aggressively pushing higher while the DXY starts selling off? Who knows? And then Euro New Zealand. Do you know what? I like Euro New Zealand, but it's not the best pair in the world to trade. But the reason why I like it is because it's one of those pairs where it does respect price action and where it's going. And what we do have here is, okay, so in terms of pattern separation, if we just see this off here, we had the squeeze, we then pushed up, we then didn't have the best price action in the world, but eventually we made our way higher, and then came in here, and now we're just squeezing. What we do tend to see sometimes, and what I do like about this, is that squeeze could get filled. So we could see a sell-off for that squeeze, but obviously there's a lot of points in there, so I'm just going to point it out. Let's see, so if I've got this as a whole section, and that is the retest, so if I take this out here, we can see, okay, fine. So what happened was, as we broke, we had that little bit of liquidity there, which is quite cool. And then we broke and started moving higher. As we moved higher, we can say we can mark off that now, and we could say that this could be an overall range. So what I am interested in seeing is if we don't have a micro range in there, so it's not going to continue squeezing, and you know, we don't get something like this and it does something like that, which is still okay. You know, if you've got something like that, you've got your 1, 2, 3 in there, you get positioned in here and you can go long, great, why not? And then you're still trading within a more evolved squeeze. But what I would be interested in seeing is it doesn't do that and it starts to sell off, gives a bit of a gap, comes back up, creates a bit of base, and you get something a little bit more on the side of the flat, and then you go. I think that would be a pretty decent long continuation, because it is working in the sense of the phases. It's then accumulated and then it's pushing even higher. And if I go to the monthly, you can see that, you know, right now with the momentum, it's not really showing any signs of exhaustion, even though you could argue that, oh, what about this 1, 2, 3, you know, and then what about that? You know, you're just going to keep drawing them on. And I think this is the trap that a lot of traders fall into, is this is all being positioned in such a way to create that sort of, what about the sell, what about the doubt, where's price going? It doesn't really matter. What price is telling us right now is that price isn't ready to sell off. We're seeing that on the monthly, we're seeing that on the weekly. We're not seeing that strong exhaustion. We're seeing accumulation and push, continuation, push. You know, if you read this price action clearly, which I think is a lot easier if I put it on the line chart, you can then see it here. You know, price hasn't shown exhaustion yet. You've got, let's say that's double bottomed down there, it's come up, it's then created continuation, it's pushed up, it's then retapped into the area of more continuation. So that's huge accumulation within that whole area. It's failed to sell off. You have to bear that in mind. It's failed to sell off here, it's then pushed up, given more continuation, small consolidations in there, small consolidation in there, small consolidation. Where is it going? It's clearly going somewhere where there's a clear value area right there, and then there's a big one right up here, and then these small little points here, which I don't think are the ones, but again, it's pushing towards liquidity. So what you want to be doing is you want to get on the side of the market that's pushing towards those points. So once you've established where price is potentially moving to, and right now we can see it's actually moving with a bit of aggression, because it's had this accumulation, all of this failed continuation, all of this, it's ready, man, it's going. So at that point there, we're seeing price creating these patterns, and then we can go down to the 4 hour and we can see, well, you know, some of them are a bit steep, so we understand that's part of the nature. We might see something steep in here, and it could be more in the sense of a 2-touch, which is fine. But again, something like that, if that repeats itself over here, that's more than enough. That's perfect. I think that is something that in itself we need to be sharp and ready for when it comes to taking trades on these pairs. And if it does sell off for whatever reason, you know, we're going to see that momentum come in and we can take advantage of it. So that's another nice pair. And then EJ, similar to what we were talking about on Kajen, I just think that, you know, there's a gap there which typically is probably going to get filled at some point. Doesn't have to get filled straight away. It does look like we're selling off, but again, it's another trade that I was shadow trading, where we basically had the exact same thing we saw on Swiss yen. Obviously you can see I've taken a bit more on a stop loss there for whatever reason. I wanted to get just protected above that, just in the case that we did it. I don't think it was the most necessary. You know, I think you could have probably got in with around about 15, 14 pips. And then, yeah, that ran for around about 4 something. I would have probably walked away with 2.5 on that. I wouldn't have held through that and then held through, but yeah, you can see it's a pretty decent trade. Obviously I had around about 20-ish pips up here, so I would have probably walked away with around about 2% on that trade if I took it. But yeah, pretty decent trade in itself. 4 hour, you can see it, so it's obviously come into that area there and it's decided to sell off. There was nothing significant to the left, just, you know, just took a random sell off, and these things happen. Just waiting here now, see how price responds, and after that we can make a decision if price then starts to show levels of a base being created. At this point here, we could potentially anticipate this being sort of corrective and potentially creating something like that, for then eventually creating that to then smash through to the upside. If we get something like that phenomenal, maybe not. Maybe we might just see a sharp pushback and it comes back up. Who knows? We just have to wait and see. But at the end of the day, we know that, you know, there's a gap here, and we know these gaps tend to usually get filled. So we just have to wait patiently and see. You could take a short as well, like I said. It's just you need to wait for that clear confirmation, just in case you're wondering. I would wait for clear structure, maybe something a bit more developed at this point. But I wouldn't be surprised if this becomes a third continuation. So at that point there, you could, take advantage of price coming back up and still getting that, and I think, again, something I would keep very, very clear in your mind, that when you have a gap like this and then you've had momentum and then you get something like that, most likely probably going to fail, and then you can take advantage of the failure. And then let's go for the last one here, Euro USD. And then with Euro USD, we can see, do you know what? This, for me, is a bit underdeveloped, and I'll tell you why. So if you go to the weekly, you can see that, okay, clearly price is moving to the upside. Very clear. It's not really shown any signs of a turnaround. We've had opportunity after opportunity. If we mark that on, that was opportunity 1. You could even mark on these areas here. Opportunity 2, opportunity 1. We filled that. We did all of this and still failed countless amount of times. And when I say failed, I mean here. You can see it right there. We basically had everything we needed. All we needed was continuation, and we sell off and we go. And that would have been more than enough, really and truly. But we didn't. What happened was it then sold off, came back up, and then it started hovering. Nothing significant about these areas, I'll be honest with you. You could get caught up by simply just putting that there and being like, oh, okay, we've tapped into that. Maybe we're going to completely sell off from there. Maybe, actually, I'll be honest with you, I can't tell you for sure, but it's unlikely, in my personal trading opinion. It's unlikely we're just going to sell off from there. And if we did, I would just say line in the sand here, we sell off, we get continuation here. I can at least manage it into that point there. And then at that point there, if we get more continuation, I can just keep taking trades here and here, and I can get in short, and then I'm playing it into those lows. And then, I'll walk away with a pretty decent risk reward. But I'm not looking for that right away. What I am looking for is this being the up point there. Remember, we are on the weekly, so we're going to get into the lower time frames, but we can see that's the weekly clear value area right there. And then we have that point just above. So I would put them both on, just so you're aware. In fact, I would probably mark on this one, because we probably would form a reaction as we come into those areas daily. We can then see that, okay, well, you could mark on this, you could mark on that. Really and truly, we've had multiple opportunities to sell. Even as we came in and retested this area here, we tried to sell, we failed. So I'm not seeing enough commitment from the sellers to say that getting in on a sell right now is the best decision I could make. But I do want to be in the neutrality mind of the intraday, and seeing that, okay, we had this accumulation, wasn't the best, it was steep, but then we've left this little drip here where arguably, was it retesting this? Maybe. But then at the same time, I have to ask myself, we've then come in here, we've tapped into the high, we've then started to just kind of sell. What if we're coming in here to create a base and then we're moving back up? And then you look at it like that, and that makes sense. So you can see over the course of the daily, we might look at Euro USD shorts before we see Euro USD longs. So I'm just going to clear that off for a second. And yeah, so what I'm going to be looking at now is keeping it very simple, and I'll just mark it up. So we can see obviously where that was trading. I think it's irrelevant to have too many lines on the charts at this point. I'm looking at continuations for longs. I'm going to mark this on here, right there, and then I will probably just say there's either not that tall. There's either two things I'm looking for. I'm either looking at, and just to kind of point out, I'm not going to leave this on my chart, but for you to just see what I'm thinking, I'll probably see something like this where it's channeling. So I want to be aware that we are within that potential for that channel. We could get something in this region here. So you want to be conscious about that, because remember, the value area is up there, right? So we could squeeze straight away. We could squeeze straight there. And you're looking, you're waiting, and you don't get these prices tap into these areas, and that's completely fine, because it doesn't need to. So then I go to the 4 hour, And then I see it and I'm like, you know what, that was just tapping into that liquidity there. So now it's irrelevant. I don't need to be wondering about it so much. But if price did for whatever reason come down there, I'd understand that's most likely coming to tap into that, to just beat that liquidity. I think really and truly we've done what we needed because of our pattern separate this, and we see it for that. That was one piece of its own. And then you can see it here, push up, small consolidation in there, small consolidation, large consolidation, then came into these areas. And then what happened was we then started to come into that area there. We then had a 1 2 3, we squeezed. If we were going to sell, we would have sold. We would have then had continuation or whatever. We would have committed and we would have gone, but we didn't. So then that kind of gives me a clue. I'm just going to clean this off and then just put on that one part of the evolved structure, which was here. Right. How did we move? We moved corrective. So that's its own piece of structure right there. And that's the clue. It's right there. It's easy to miss, and I understand that because it takes time to be able to decipher these things. But we had the liquidity point there. We had the structure now, and then we've steeply tapped into it. Now that we've tapped into it, we can take advantage of the next move. So if you are looking at this, you should be looking at the potential for this to go long. Now I would be looking for something in this region here, where price then does that. And I would probably set a reduced risk entry, because in the case that this then comes off, sells off, does this, you would have survived not being stuck into this trade because of the reduced risk entry. But I personally, in terms of where I'm sitting, I would say, you know, we're basically here. We then see this accumulation. We can go to the hourly now. Why? Because we understand what it's done. We can see the larger structure. We don't need to draw on, but we can see it. We can see we're meeting with this area here. So there's two things. You can be patient and take the lower risk trade, and the lower risk trade would be we break this, and then price comes up here, and then we get the continuation here, and we go. Right, and you can manage it into that section and above, and then from here to here, maybe you've got 3%, and then to the high up there, you've got maybe 8% or 7% or whatever. So that's the way I see it in terms of taking advantage of it on the lower risk side of things. However, if you are looking at the, where price is now and potentially this, I think that's just way too risky, man, because you could be asking for a bit of trouble. And I'll be honest with you, do you know what? The more I think about it, I think it's not worth it. I think you're much better just waiting for that to break, and that's where the clue will come. Even if it just shoots up and you don't get a trade, it is what it is. These things happen, but really and truly, that could squeeze, and then as it squeezes, it kind of just stays within that squeeze, and then you're looking at that and you're thinking, but it was squeezing, but then what we had was maybe we had a structure in here that became a running channel, and it went, and it does look like a start of a running channel. The more I look at it now and I've thought about it, that could be a part of this, then comes here, comes up, and then it comes down, creates that sort of, mimics that structure. Maybe it could be steep, but then we get something like that. We can get positioned and go long, maybe even a reduced risk entry, and then you can trade it in there, and then even from there to there you might get a 3 to 1, 3 to 1, and then up there maybe the same situation, 7 to 1. So there's multiple ways we could see this. It's just in isolation, that would be the same continuation that we're looking at, that we were saying was sitting on there, which was flat. Again, if it was flat, I'd probably try getting for the risk because it would be much easier. If it was steep like this, or similar to that, that steepness, I definitely would try get reduced risk on it. But that's basically how I'm looking at it. And then on the other side of things, if we don't respect what we were just saying and price does start to sell off, I would still be looking at longs, but then I would be looking at this to potentially come down, and then to do something like that and then fail and then give me continuation again, and I would still be looking at that as a potential failure, rather than it seeing it as it makes sense for it to now sell it from here and go. And the only time I would sell it from there and go is if it did form what we're looking for, and let's say it did create this, and then you had that, and then it was like, oh, this looks interesting, but then it's like corrective, into structure, I would wait insurance entry, and I would wait and let it be in there structured, and then I can at least manage it into that low if it's the one. Or I can wait and potentially see that failed, continued, and then I understand, okay, just wait for that small consolidation there, and that could be an avoidable loss. So it really just depends on the positioning, the sequence, and all of these things. I'm much more favorable in for the longs, because DXY short makes a lot of sense right now as well. So let's just quickly go back to the DXY as we finalize this. Yeah, and as you can see, DXY is also sitting on this area here, which doesn't hold them any major significance, but as we mentioned earlier, that gap's there. We've already tapped into the low. We could easily just respect this and just go. Am I still? No. Yeah, we can respect that and just go. So guys, I hope you enjoyed this video. I hope it was a lot of value, and I'll catch you guys in the next one. Take care.